So, ladies and gentlemen, thank you very much. Everyone who's made it to this session. You're welcome to the Urban Regeneration session, where we're going to be having pitches from three brilliant organizations. And we also have two judges for this afternoon. I will introduce them first. We have Ajia from GreenPad Enterprise and Leah from Sequoia Investment Management. My name is Adetunji Lawal. I'm the head of energy and carbon for Wates Group. We are a family-owned, the leading family-owned construction company in the United Kingdom. We also are into significant areas of maintenance. We've been going for over 125 years here in the United Kingdom. So we understand a few things about urban regeneration, which some will call urban renewal or urban reminiscence. Now, we are no doubt in a scenario where we need to address the climate change issues before us. We're in a crisis, and Wates' purpose is reimagining places for people to thrive, which means we want to create spaces, urban spaces, where people thrive, which holistically means a thriving people, thriving planet, and thriving places, so that individuals can make the best of the societies where they live. Now, that all speaks into urban regeneration because the built environment, as we all know, accounts for around about 40% of global CO2 emissions. And the remainder is, frankly, industry, trying to make and manufacture the things we love and we consume. And within that urban regeneration concept is the interface, oftentimes a bit of a clash between people, transport, and infrastructure. So we'll be having some really interesting pitches this afternoon, and we want you all to listen and be with us as the judging goes. So I've got the pleasure this afternoon to call on the first pitch from Andy, Nature Broken. Andy gets it here. Oh, good. Let's give him a clap, please. Let's welcome him. Okay. So you got a few minutes. Tell us the brilliant work you've been doing.
Thanks very much. Can everyone hear me? I can hear myself. Couldn't hear the clapping, unfortunately, which is a shame. While we get the slides up, for you urban regen pods, I think we've been put slightly in the wrong category with more corporate sustainability. Having said that, many of our clients are major real estate investment firms and clients that we're looking to support. So there's a huge amount we're actually doing within the built environment to help them with things like net zero building standards. So bear that in mind, but we are slightly more corporate sustainability. Thanks very much. Guess it works in the standard way. Right. Nature Broking, thank you very much everyone for listening. We are the premium natural capital and carbon credit intermediary for the world's largest organizations. What does that practically mean? Well, we help companies meet their net zero goals in a way that they can be proud of by investing in the best carbon projects you can possibly get hold of. But critically, we're at the vanguard of the financialization and professionalization of the carbon markets, which is critical to reaching scale within carbon markets to solve some of our most pressing challenges with the climate and biodiversity and nature. So we do that in a couple of ways. Overall, we take carbon credits and we package them in a way that makes sense for a CFO and a business's bottom line. We are bringing financial service innovations to the carbon markets. We build diversified, de-risked and insurable portfolios of the best carbon credits that can even be brought forward. And we're even now innovating by capitalizing carbon credits on balance sheets as a true asset, which is fundamental to growing this market. We've obviously got quite a roster of clients in our short 18 months of trading, and it's been a very, very exciting journey. Last year, we raised £250,000 in our initial funding round from angels. Now it's all about growth and capitalizing on that with this £1 million fundraise. This year, we expect to do 1.6 million in revenue. That would actually make us profitable, but it's not just about profit, it's about growth. The market is exploding around us, and we're right at the front of it, so we want to capitalize on that opportunity. 25 clients so far and counting, 6 employees, and we're going to take this to the next level. What are we actually going to do with this funding round? Well, really, it's 3 things. It's unlocking capacity within our team. So we've got more proposals basically coming in than we can deal with, and we are right at the front of the UK market, which is pretty much the most exciting place to be within the carbon markets at the moment. So we want to take that, supercharge that, and grow out in our core market. We then want to take that model, that proven model, and apply it to targeted European markets that are analogous to where we work: Germany, France, Italy, Switzerland. Super important that we do that, and we can go and take that model to analogous markets. And the third thing is what we're calling our operational system. So this is a little bit around operations, but actually mostly around using AI and large language models to digitize our due diligence. The thing that we're known for is trust and having the best carbon credits and projects you can possibly get hold of, and that is in no small part to our due diligence framework, which we actually now sell as a service to companies like NatWest and other major organizations. It takes a long time to do that due diligence, but we know we can get it down to only mere minutes through AI usage, which we've already started doing and developing. So part of this raise is to supercharge that as well. Too small and boring for a 4-minute pitch. Too small and boring for a 4-minute pitch. Right, who are we? Our background is in banking, insurance, and finance from our founding team. We've got our head of science, Russell, who's come from the UN and is an ecology expert and a master's in ecological law. He runs our due diligence. And on the right-hand side is Peter. He's our chair, and he is the former CEO of Legal and General Investment Management. Why has he backed us? Because he sees this as the next big thing in financial assets, the carbon markets. Thank you very much.
Thank you very much, Andy. That was really quick, to the point. You said you've been on for, just a question, you've been on for 18 months. And you've worked with a number of organizations in that period. In terms of how you're looking at the future, what exactly do you have in plan? Could you just give us a few seconds?
Yeah, sure. So yeah, it's been a quick journey. I'm a lot grayer than I was last year. It's been quick. So we've been going about 2 years, trading for 18 months. We are going to be one of the big players in the asset management world when it comes to carbon and natural capital. That's the goal. So the institutions that we work with today are large corporates because they operate at that level. They have big projects, big things that they need doing over the long term, and that's how we will work. We will move more into the financing of project space in order to deliver that, supporting major asset management institutions, which we're already partnering with on other initiatives. But at the core, we're helping organizations become net zero through carbon credits, because you have to have carbon credits to be net zero. And we're at the forefront of doing that. So that's what we will always do, but we will expand out into the asset management world through that.
Thank you very much. I think our judges have... Yeah.
Thank you for the presentation. It was nice. And I just wanted to know what your role is within the carbon market. So where do you lie within generators and...
So we are an intermediary, but we're a high advice intermediary, so we're not self-serve. So what we act as, the analogy for us is we are an investment bank or a strategic consultancy, but we're essentially brokering the deal in between. So high value, bespoke deals for large corporates where we go and source the credits, do all the due diligence, package it into a diversified portfolio that makes sense for them, manage it over the long term. So for example, we've just signed a 5-year, £2.5 million deal with a law firm, £500,000 a year. They will be committing to spend with us £500,000 a year on carbon credits over 15 projects this year, probably be 20 next year, and the portfolio will expand. We manage that portfolio for them.
Well, what if a company can register their carbon credit themselves using any, like the Vera standard, the gold standard? So why would they want to come to you?
Because there are upwards of 300, 400 project developers out there. There are 35,000 carbon projects and counting, expected to be 50,000 next year. It is all, some of it's terrible, some of it's amazing, it's all over the world. It's incredibly complex market to access. You need high expertise to do it. We're a team of 6 and we're run off our feet already doing that for our clients, which is why we need to expand. It is outsourcing your treasury function for carbon credits. That's exactly what it's doing, because it's very, very complex.
My last question would be, you talked about helping businesses to reach net zero, right? And to reach net zero, to use carbon credit, that would be to use it to offset their residual emissions. So it's not going to be like the priority for a lot of companies now in the next 5-10 years, because a lot of companies will be reaching net zero by 2035, 2040. So how how are you projecting that into your financial model? Because if you're going to approach a company like KPMG now to come and buy carbon credits, they might not necessarily be interested because they're still looking to reduce their scope 1s and 2. So,
carbon credits. KPMG does buy carbon credits. All these. So I spoke to the global head of sustainability EY the other day. They have a team that buys carbon credits, and they need this exact service because, and here's the reason, they have their residual emissions they need to deal with. 2030 is their target. 2035, whenever it is. The closer, the more urgent. Prices are always rising for carbon credits. So if you're locking long-term contracts now, you're hedging against future price risks. So buying forward contracts. You're locking in your supply of high-quality credits now. As demand shoots up, as you say, it's about to because of impending net zero targets, you're getting your supply in at a low price by locking it in. So actually, we're now seeing all these large organizations, the smart ones, coming in and saying, I want to get these long-term deals in, these portfolios in now, otherwise I will not be able to. For the law firm, the net zero year is 2038, so quite a long one. We are saving them £12.5 million by spending now versus buying those credits at predicted future prices in 2038. So there's a huge incentive to do it because that is an actual liability that sits on your balance sheet of £12.5 million that you're going to lose.
Hi, Andy. Thank you for your presentation. I had a couple of questions around, could you give any examples of the type of carbon projects that you have in your diversified portfolio? And you mentioned nature at the start, so I wondered talk about what you're doing on that area.
Yeah, sure. What would be important to you, by the way, out of carbon credits? What do you care about?
Is it in what projects I would be looking
you
for in my
personally, what would you
portfolio?
find interesting?
To be fair, we have it's very low on our agenda of like where I get time to present to the board, offsetting schemes, things like that. They spend very little time, so it's a hard sell, I think, for me they tend to care about price. They tend to care about reputational risk as well. So again, probably veer with some of the bigger players, things like gold standard, verified, things like that. But that's the kind of the limit of interest in it for our company.
Which is exactly why we build the message to the board. So you can put it in financial terms, make it a CFO interested in it about assets and that kind of thing, it suddenly becomes a board message. Now, in that respect, a portfolio that would work for you and that we typically would build, because that's what we hear a lot of, you care about price, so you want to lock in your price now. So we'd be doing longer term contracts because you're locking in a low price, prices are rising. We would do nature-based solutions because they're actually very good value. So we work a lot with things like regenerative agriculture, soil carbon. So that's really, really great. Loads of co-benefits for nature and communities. A lot of woodland is fantastic afforestation, planting trees basically. Relatively good pricing. So that could be the bulk of your portfolio. They're low risk if you do them in low risk countries. So you would have UK-based ones. There's a slight premium for that, but you would get much lower risk as there's less reputational risk and geopolitical risk. You would balance that with technology-based solutions. So we do lots of things like biochar, enhanced rock weathering, some direct air capture, all of it very high quality removals. Some of those things are slightly more expensive, so the price consideration would be there. But that gives a kind of sense of how we balance everything and the different things we work with, I hope.
Thank you. And you also mentioned, I think to me it seems like your USP is very much the quality of the portfolio, the diversification of the portfolio. And you mentioned moving towards more AI models to do some of that DD. Do you see that as a risk?
Human in the loop, because you cannot have a black box of AI doing something you don't know what it's doing. But what we're doing is ingesting lots of documents and then essentially giving a certainty score for AI. So we will basically, it gets us to that first step, and then the human can come back in. Russell and his team can come back in and know exactly how it's all worked, go through and do that check over. So we don't see it as a risk as long as we get our processes right on top of it, I guess is important.
Okay. Super, thank you.
Thank you very much, Andy, and our judges. And can we give him a big clap, please, for an excellent presentation? Thank you. Yeah, that was really interesting. Carbon credits it's something most organizations will require, maybe not now, but at least in the next 5-10 years in their net zero journey, including Wates. So our next presentation or pitch is coming from Sandra from Emissive. Okay, let's give her a big clap, please.
Can you hear me? Right. Hi, everyone. We're Emissive, and we're on a mission to cool down the planet. Now, over the past 3 years, we've seen some of the hottest years on record. And this year, likewise, we're also feeling that summer heat. Just think about last week. Now, it's not just humans who are feeling that heat strain, it's also our infrastructure too. From batteries to buildings, we're now over-relying on active cooling systems, and that can have a detrimental effect. So much so that cooling demand is attributed to about 1 gigatons worth of CO2 emissions globally, and that is only set to double by 2050. Paradoxically, this is all just heating our planet up. Now, customers actually are aware of this problem, and they are looking for solutions, but they are struggling to find cost-effective and easy-to-implement solutions in the market for cooling. Think about how easy it is to implement a chiller. It's a huge piece of infrastructure. It's not very cost-effective. So we need to think about passive cooling. We need to think about scalability and accessibility. We need to rethink how we cool. And that's where Emissive comes in. We're developing a first-of-a-kind, transparent, temperature-tuned, radiative cooling coating that passively lowers surface temperatures without affecting the underlying aesthetic. A game changer over the current ceramic white coatings that exist. How the technology works is by reflecting solar radiation, but also emitting in the mid-infrared range sky window, which allows us to access sub-ambient cooling potentials. And this is all powered by cool nanotechnology particles, which allow us to emit at a close to emissivity of 1 in the mid-infrared range, and supercharges our cooling potential. Along with AI discovery, we're hoping to achieve 5 degrees cooler surfaces, save potentially around 20% of energy on infrastructure assets, and avoid, on a global scale, around 200 megatons of CO2 if scaled up. And talking about global scale, if we used Emissive's coating on 2% of Earth's surface, we could absolutely balance global warming. So our team is actually built between Sandra and I, who bring over 14 plus years of investment and engineering expertise in the built environment. Myself, I've spent time as a thermal and computational fluids engineer, and Sandra has come from a real estate private equity background. And we're backed by some amazing advisors from the Imperial Solar Coatings Group, as well as a Google data scientist who is helping us speed up and optimize our synthesis. So why transparency? Well, transparency is about being adoptable and adaptable and without affecting anything that you already have currently in your assets. That allows us to tackle the $544 billion global functional coating market. So far, we've talked to over 36 plus customers in the CNI space, and they all have shown interest in cooling. It's a multi-sector problem. So with the right technology, we can help people cool, we can save them on carbon, cut down costs, and improve energy efficiency.
But we are starting with what we know, buildings, where we target commercial developers and owners with a B2B sales model. For our go-to-market, we aim to secure distribution partnerships with architects like Foster's who are eager to pilot Emissive, as well as portfolio contracts with institutional investors. Our interview showed that most facades unpainted, making a transparent coating highly attractive. Listed buildings lack cooling alternatives, and in new builds, retaining aesthetics could drive premium pricing. Emissive offers the only transparent, heat-adaptive, and potentially recycled solution. While opaque paints may cool more, our transparency unlocks a larger market. We aim to retail at about $30 per litre, matching our most expensive peer. Applied to the Lloyd's building in London, Emissive delivers a 1.6-year payback and over 2 times ROI, saving Ping An $1 million in cooling and facade maintenance costs. For us, that translates into $90K per building for each 5-year coating cycle and a 50% gross margin. Since forming Emissive this January, we've actually won 2 competitions at Imperial, received a $20K grant from the Undaunted Accelerator, obtained customer interest, grown our team, and are working on our next grant with the Royce Institute of Materials Research. We're happy to share that our prototype cools by 3 degrees Celsius and is currently translucent. We are still optimizing it and aim to reach our MVP and file a patent at the end of this year, where IP would fully vest within emissive. We expect to pilot across buildings and early adopter verticals next year, dual tracking our way into saving over 10 kilotons of CO2 by 2029 annually. Winning the Startup World Cup would be transformational for us. It would enable us to continue securing lab space and continue prototyping, giving us runway to 2028, where we expect to break even. To recap, radiative cooling is an electricity-free way to cool. We are pioneers in transparent coatings, and we see Reset as the perfect launchpad for emissive. Join us in building the future of cooling together. Thank you.
Thank you very much. That was a really, really interesting presentation. Before I pass you on to the judges for the questions, I've got a few questions of my own. Number one, you spoke about a 5-year cycle of coatings. What between year 3 and 4, or between year 3 and 5, what is the degradation level of your coating?
So usually, because our coating is going to be super hydrophobic, it means that usually within the first year, while the things would degrade by about 25% due to dust collection, we should be able to extend it to at least a 3-year cycle, which is how we came up with the 1.6-year payback for Ping An. And from then on, it will be just cooling savings from them. Yeah.
That's number one. And then number two, do you have an EPD for your product? An EPD?
No, we're still at...
Okay.
I can do that. We're still in the process of optimizing our material search. So I think once we're closer to final synthesis, we'll get the LCA done. And then that's something that we can then put EPD or create an EPD for.
Okay. Thank you. So I'll pass you on to the judges. We've got some questions for you.
Hello, thank you both. Question, I may have missed this. Have you made any sales yet? Where are you in that cycle?
So we're pre-sales at the moment. So we're still in the lab. We've probably got like another 6 months to go till we get out. But we've been talking to a lot of customers, and we've got a lot of customer interest for pilots. So there's hopefully our way to market from there. And they're not like huge, potentially complex buildings as our first customers. They're actually something which is a bit more small scale, like Uber deliveries, sort of package where you could help keep cold chain food storage a bit cooler. Maybe Sandra can add.
So I think we are currently doing it as a market pool kind of strategy. And as Nikhil mentioned, there are multiple sectors that we've been speaking to. Within the cable sector, we also have some interest on a potential co-development to create a coating specifically that reduces cable heat.
And have you spoke to any of the maybe bigger firms out there? Obviously starting small, I get that, but I wonder if you've started to have those conversations with some of the bigger businesses. Yeah, definitely. I mean, we can go back. We've actually started conversations across multiple sectors. Within buildings, we've primarily spoken to a lot of engineering firms, facade engineers, and in the institutional real estate space, we've spoken to quite a few as well. So we think that's probably the best way to scale rather than targeting residential buildings. And within the other verticals, these are also pretty much institutional investors and operators in the space. Yeah. And have you had any pushback or concerns or hesitancies expressed in your conversations you've been having with some of the bigger players? To be honest, I think some of the verticals over here are more early adopters. So for example, cables are an early adopter. Uber and Tesco are much more early adopters because you can trial on a much smaller product and it doesn't really affect the entire building. Whereas if we talk to the institutional investors on the real estate side, they're as you mentioned, we might need to have some certifications. So our entire strategy is to first trial things on a smaller scale, get the traction and show that it actually works, and from there then get the buildings contracts. Perfect. And last question from me, you mentioned you're working towards patent as well. Is that, if you won the prize money, is that what it would be used for, or have you got other things you want to split that money? So at the moment, we've got our first grant of 20K, and we are hoping that if we stretch as much as possible, we might be able to make it work within that 20K, but otherwise we'll need to find other sources of funding, and for us, 1 million would be really transformational. Yeah. Thank you.
Hi, yeah. Thank you very much for the presentation. So I just have a few questions. So first, you said you're going to save about 200 metric tons of carbon. So how many coatings are you going to sell to be able to realize that?
So on the 200 metric tons. That's if it's covering the entire buildings industry. That's the potential that it could save. But for us, we are just targeting to cover 75 buildings, and that would be saving about 10 kilotons of CO2 per year.
So how many percentage is that 75 buildings of the total market?
That will be a pretty small percentage.
Okay, so
Yeah.
that's your target market, right?
Yes, that's our.
Just to clarify, that's just 75 buildings within like the next few years.
How many years?
So after it's 5 years. So
5 years.
To 2030, it's like it's a scalable, it's a reasonable scale for us to like build out to get.
And how much is that going to generate you?
So according to this,
And in terms of finance.
yeah, so revenue would be about 11 million in revenue, and then we'd make about 4.5 million in gross profit once we get to that scale.
Right. Okay. So selling 75 coatings.
Yeah, so to coat 75 buildings.
Buildings in the
Yeah.
UK.
Yeah.
Will generate you 11 point something
Yeah.
million.
And the thing is, there's a lot more growing demand because we're seeing effects like urban heat island effect, especially in cities where they're trying to manage cooling. But it's also in Southern Europe where, again, AC systems are not that common. So it's actually being able to retrofit larger infrastructure projects with this type of coating, and they can not only feel more comfortable inside, but they'll see better cost savings, and they wouldn't have to think about where am I going to put a chiller or AC unit, because that takes up a lot of space. So this is a really non-invasive retrofit.
Okay.
We just wanted to highlight that this doesn't take into account potentially scaling across, for example, cold chain storage sectors where you're not really measuring in terms of carbon dioxide reduction, but you're measuring against potential heat damage. So by just extending, for example, we're speaking to a cold chain delivery company, just by putting this, we can extend their fruit delivery boxes by perishable time from 2 days to 3 days. Okay. And that would be a lot of revenue impact for them, and also food waste reduction.
So my second question would be, you said you have a portfolio contract, so one with CBRE, because I used to be an energy and sustainability manager with CBRE, okay? So I know how decarbonisation, how top it is on their agenda, okay? So what CBRE that you
Hello.
So CBRE has a portfolio contract, so which CBRE is that? Is it 61 Sadok Street, or how many buildings did you serve with your coatings in CBRE?
So just to clarify, these are just companies that we've interviewed to talk through.
So you don't have any commitments from CBRE at the moment?
No. So this is part of our market validation to show that there is a need for this product.
Okay.
So we talk to all of these distribution partnerships and institutional investors to see actually is there a demand for this product, because that's how we validate.
Have you signed any MOU with these distribution partnerships?
Not at the moment, but we're in the process of getting some LOIs ready for pilot testing. So those conversations are ongoing. It's just making sure that we have the right NDAs.
That's fine. Thank you very much. Thank you.
So thank you very much. That was a really, really good speech from yourselves, and you'll hear from the judges at the end.
Amazing.
Thank
you
you
so much.
Okay, and the third speech this afternoon is from Virginia from Lawal. Okay, please come up, and please note you've got 4 minutes for super high pitch, and then questions will follow.
Thank you, everybody. So yes, I'm Virginia Gardner, the founder and CEO of Luwat. And before I dive in, I just want to quickly highlight what we're trying to do is shift the sanitation paradigm. Why? Because currently about 65% of the human population lives without access to sewered toilets. Greenhouse gas emissions are actually a serious byproduct of the lack of sanitation. Recent studies have shown that in the city of Kampala, for example, about half of the greenhouse gas emissions that come from the city come from untreated human waste from latrines. And of course, the lack of sanitation also has terrible social impacts on human health, productivity, et cetera. So that's why we're here today, to address this problem. So Luwat is a leader in sustainable sanitation. We are expanding in Africa and also set to expand beyond. In sub-Saharan Africa, there are about 750 million people living in cities without access to safe sanitation, so this is a very big market. Presently, we're serving over 50,000 people per day on average, and we've generated about 3.7 million in revenues to date. Our system is tech-enabled and patented, and our servicing companies are set to reach EBITDA positive in 2025. We believe that to shift the sanitation paradigm, we need to deliver a really high-quality experience to end users in terms of hygiene. So we believe that a toilet needs to be safe and clean, protect water resources, support the circular economy, but most importantly, bring joy to everyday life. Why? Because if you want to change the paradigm, you have to deliver value to the end user. Otherwise, you can't have a sustainable financial model to drive systemic change. So we were established in the UK. We spent a long time developing and refining our technology and have also sold some toilets here. In the last couple of years, we've been focused solely on our African servicing companies and getting them to grow. We started out in Madagascar with support from the Gates Foundation. That business is on track to be EBITDA positive this year, delivering services to homes and portable applications, and also converting waste into biogas and fertilizer in partnership with the utility. And we're now replicating that model in South Africa, where there's a $220 million addressable market. And then we will be looking to replicate beyond. And stay tuned, because you might also be accessing a Luwat toilet in the UK soon. The way it works is the toilet basically packages and contains waste in a flush system, so it's a continuous seal. It looks and feels like a flush toilet. Customers say it's on par with a flush toilet. The toilet is then serviced regularly. The polymer film, which comprises just 1% of the waste stream, is then separated for recycling. And we have a tech-enabled system that uses a mobile app and platform to track service and measure impact. So this is a simple-to-adopt additional thing that can be added to utility services in cooperation with local service providers. So Kalula is our South African servicing company. It's a big addressable market with about 2 million homes living in informal settlements without access to private toilets at home. And we are delivering customer paid services through Kalula, and we have a really high level of customer retention and customer satisfaction. And then we are adding to that commercial services as well. More on that in a second. South Africa alone has a $220 million addressable market. And when we go beyond, it just gets bigger and bigger. So the business-to-customer offering has shown really high traction so far. It is unlike anything else on the market because we can deliver the circular economy. Customers have the agency to choose to have a clean, safe, individual home toilet. Most of our contract holders are women, and currently we're receiving more than 95% on-time customer payments. That's complemented by a business-to-business business unit, which is doing event toilets and trailers. This is the electrified version of the toilet that you saw before, so it's a bit more slick in terms of you push a button, and it goes down smooth. You don't see anything, you don't smell anything. Great experience, and by putting the two together, the servicing company can reach profitability faster. So customers love it. There's a lot of potential impact. Just to look, spotlight zeroing in on Kalula, we're looking at significant social impacts in terms of improving health and dignity, especially for women and children, creating jobs through local servicing companies, and also mitigating carbon by actively managing waste, removing it from households, and promptly putting it into anaerobic digestion systems to generate energy and fertilizer. We have local executive teams in the countries where we work. We have a very lean team in the UK, which is supported by a very strong board, which I can talk about more in the Q&A. And then you can see here just the heads of the two companies in Madagascar. Luwat Sarl in Madagascar now has about 1,100 toilets in operation and a team of about 35. And in South Africa, we're up to about 6, with about 200 toilets set to be installed by the end of this quarter. So we're raising $2 million to drive expansion. We want to establish localized production in South Africa. We already have production through outsourced manufacturing in the UK. And we want to replicate that in South Africa to reduce the landed cost of our toilets to the servicing companies. We are going to bring our servicing companies to profitability and then start replicating the model and selling to service providers in other regions and other territories. And then as we become profitable, we will continue to reinvest into technology development in what we think is a very important space, which is waterless, circular economy, non-sewered sanitation. So I guess we'll move on to questions. Thank you so much.
Thank you very much, Virginia. That was a really good presentation. So, very first question, sustainability. What happens to the material you pick out from those, assuming 2 million homes in South Africa? Where did they go to?
So our technology is designed to deliver waste as feedstock for conversion into energy and fertilizer. In South Africa, we're in an early stage now. So our strategy is to partner with utilities and to start delivering into utility infrastructure and to support the transition to circular economy. So in Madagascar, we're further ahead in that journey. We're delivering waste to a network of decentralized anaerobic digesters that are operated by the waste utility, and then our business supports them in terms of technological expertise. We have built and operate one anaerobic digester that was funded by the Gates Foundation. It uses technology that combines production of biogas with pasteurization of the liquid that comes through the system so that you can have a safe plant food product that comes out the other end. And our business then also is working with utility on the other digestion sites where they generate biogas, they generate fertilizer. So basically there's a kind of symbiosis between the servicing company and the utility. We're delivering waste as feedstock because it's fresh. It comes from the toilet straight to the utility site once a week. And then they're able to then convert it in different ways to value. But if you don't have that infrastructure yet, our waste can also go into standard wastewater treatment. It can also go into machinery that produces biochar from waste. So there's a flexible approach, and what we also wanted to bring was a readily adaptable approach to utilities. Because if you look, for example, at the city of Cape Town, they have tens of thousands of chemical toilets operating and delivering chemical waste to the utility sites, which is actually difficult for biological systems to process. So we can bring an upside from the beginning, and then we can further bring an upside by offering solutions for adopting the circular economy in ways that suit the local environment that you're in.
Thank you. So I'll pass you on to the judges for their questions.
Hello, thank you, Virginia. That was great. So, which market were you in first out of the UK and the two African ones?
We entered the Madagascar market and the UK market at approximately the same time. We established an event business in the UK serving events like Wilderness Festival, Port Elliot Festival. We always did VIP, always very boutique. And we actually, after the pandemic, wound down that part of our activities because we were spread too thin as a company. The Madagascar enterprise, which was initially funded by Gates Foundation grant funding, was starting to grow. We had these opportunities in other places where it seemed like there's a huge impact pitch and also a huge need for toilets. So we decided to focus our efforts there for a little while, put the UK on hold for a little while. But we have a technology that I think can be applied to many, many markets because of the user experience that our toilet delivers.
And obviously those are very different markets, the UK, Madagascar, South Africa. I presume there's even differences between those. Have you experienced any difficulties in operating these two different business models? And do you anticipate any difficulties going forward in juggling those?
Well, at the moment, we're still mainly focused on Madagascar and South Africa. If we reinstate sales in the UK, it will be through partnerships. It will be more of a channel sales partnership model, which is less hands-on for the business. We have the supply chain. We have a third party that can manage the waste. We sell toilets, so it's much more simple. In these other countries like Madagascar and South Africa, you're absolutely right. Every country's different. And we're actually market building. We're developing servicing companies that then can buy and scale up our services. However, what we found is the blueprint for the service model can be replicated. And so if you go to our website, you'll find a section on the blueprint. The input factors are different. And we believe that as the Madagascar enterprise, and that's one of the poorest countries in Africa, and as they turn the corner to EBITDA positive this year, and as South Africa follows close behind, which they can do with a smaller number of toilets because of the different levers in the model, then new servicing companies, new utilities, new jurisdictions can see how the stuff can come and work in their environment. So the input factors are different, but the fundamentals of how the model works, there are many replicable components to it. If you think about it, it's comparable to the chemical toilet market, which is kind of, chemical toilets have found ways to replicate in many, many different markets, but they're just not very sustainable or nice to use.
Thank you. And last question from me is, you mentioned your exec team and you were keen to go into that more. So I'd love to hear a bit more about who those are, and also how many people are part of your team and how they're split geographically as well.
Sure, thanks. Yeah, I'll jump over to the slide as well on the local boards, because I think that's quite important. In the UK, we have a very lean team. Myself, a head of product, finance manager, and head of marketing. But the head of product is also supported externally through a very strong advisor, Mark Bickerstaff, who spent 20 years in the space. We've been working with him for 5 years, and he started out at Dyson in the early days, and then ran toilet design at Kohler, a big kitchen bath company in the US, for 20 years. So he's supporting our engineering team on a monthly basis, part-time. And then we also have a small engineering team in South Africa. In terms of our board of directors, we have a combination of people with backgrounds in innovative financing, and also most recently Maggie Clout, who ran sanitation programs at the Gates Foundation until the end of last year, including leading their portfolio in South Africa, where they invested about $50 million over 5 years, and also brokering manufacturing partnerships for the reinvented toilet with the Gates Foundation with large manufacturers. So, and then the way that our business is set up is we use results-based management. So in each business, they're operating fairly autonomously, reporting to KPIs on a monthly basis, checking in on a weekly basis in terms of issues log type reporting. So the Luwat Madagascar team is incredibly talented. They're running a very tight ship. It has about 35 people working there. And then they have a local board as well, which you can see on this slide, which includes people like the ambassador to the United States for Madagascar, people with backgrounds in investments in entrepreneurship as well as private equity. And then Harry is the president of the SEBPT, which is an association of all of the construction companies in Madagascar. So in each case, and I guess I should be quick, but in each case, the board is really building out the team.
Thank you very much.
Hi, thank you very much for the presentation. So my first question would be about, so you have the B2B toilet hire. So what will be the return on investment for your customers on that toilet hire? What will it be?
It's very robust on the B2B. It depends a little bit on the market, but if you look in Madagascar, where they're operating portable toilets, they're generating presently about 80% gross profit margin every month on that business unit, and the toilet will pay itself back within a year. In South Africa, we're just introducing the service now, and we're not anticipating such great numbers. We haven't seen them yet, but we are planning to have an operating gross profit margin of around 55% and have minimum payback time within about 2 years for each toilet trailer. That's the commercial side.
All right. Thank you. So you talked about the payback period, which is different in different countries, okay? So is that, I believe that's due to the regulation, right? Because
Say that again, sorry.
The payback period is different. The payback period is different across countries due to the, I believe, regulatory issues around how...
It will have to do with certain factors, including cost of labor, many different specific levers in the model that might impact what your gross profit margin will be, and then what the ROI will be.
Okay, so why is the product so? Because most of what you talked about is in Madagascar.
Sorry, I can't hear you.
You talked about a lot of things in Madagascar, South Africa. So what about the UK? Is this not a good fit for the product, or is it?
I think the challenge that we've had in the UK, and it's like I said, we will be back. But in Madagascar, we were able to create we were able to access infrastructure right from the beginning, which can process our waste safely and correctly. And in South Africa, we were able to partner right at the beginning with the utility to start developing that and to start processing waste right away. And I think it's because in these urban environments, there's a really pressing need, that people see the need differently. The UK is quite saturated at the moment with chemical toilets. I think to break into that market is going to require a slightly different strategy than the strategy that we tried before. And so that was why we decided to push pause on it. And then going back to a previous question, a business needs to focus on profitability before it spreads itself too wide. And so that's why we're focusing right now on the path to profitability, mainly with these African servicing companies and the growth that we know that we can see there, especially in South Africa.
All right. Thank you very much.
Thank you very much, Virginia, and everyone who's listened this afternoon to 3 excellent pitches from Andy of Nature Broken, Sandra, Emissive, that was really interesting, and also Virginia from Lua. I think Glastonbury is it happening right now? Is it about to happen? Maybe you could, help them with a few toilets.
That would be awesome.
Thank you, everyone. Please let's give a really big clap for everyone who speaks this afternoon, and we'll give our judges a few minutes to round up their numbers, compare notes, and tell us who's won.